Looking ahead to Thursday's European Central Bank policy decision, markets are overwhelmingly expecting policymakers to leave interest rates unchanged following June's rate increase. The decision itself is unlikely to generate much of a surprise, with investors assigning only a very small probability to another hike this week. Instead, all attention will be on President Christine Lagarde's guidance and whether the ECB continues to signal that further tightening remains a possibility later this year. The backdrop has become considerably more complicated since the last meeting. Escalating tensions in the Middle East have driven oil prices higher, injecting fresh upside risks into the inflation outlook, just as price pressures had begun to moderate. At the same time, Eurozone growth remains subdued, leaving the ECB to balance persistent inflation risks against an economy that is still struggling to generate stronger momentum. The base case is for what many would describe as a hawkish hold. Markets have already largely priced in another rate increase in September, and the governing council is unlikely to want to undermine those expectations while energy prices remain elevated and geopolitical uncertainty persists. With no updated staff projections at this meeting, the messaging from Lagarde's press conference will carry even greater significance than the policy statement itself. For markets, the tone of the communication will matter far more than the decision. A hawkish message that keeps September firmly on the table could provide modest support for the euro and lift European bond yields. However, unless the ECB delivers a genuine policy surprise, broader market direction is still likely to be dictated by developments in the Middle East, movements in oil prices, and their implications for the global inflation outlook. That's all for now.